The cement major, Ultratech, has continued to be in the top headlines. Let's get you the key takeaways from the management commentary on where they see their newest foray, that's cables and wires segment, headed in terms of returns. Ashesha is here with the details.
Well, yes, some important management commentary coming in with respect to the wires and cables foray that the company had announced last week, where they believe that there is enough room for the entire industry, that is the existing players as well as new entrants like Ultratech Cement, to grow. They've also spoken about the return on equity profile going forward. They're very bullish with respect to the outlook going forward. They say that the plant will be live by December 2026. It will help the company generate return on capital of about 20%, return on equity IRR of about 25%, and the company also says that they will be able to achieve EBITDA margin profile which will be in line with the peers and the players that are currently operating in the industry. As far as the capex is concerned, it will entail an outlay of about 2,000 crores initially, but the company also clarified that they will not be entering into any new or additional businesses unless they find it very lucrative, but the initial outlay will be 2,000 crores unless they expand going forward into other businesses. Existing cement business also continues to perform very well. Their outlook for the cement business and their expansion plans are on track. They are looking to increase their capacity to 209 MTPA by FY27. So there is no harm whatsoever as far as their existing business is concerned, and their outlook and the financial profile of the wires and cables business also continues to remain very solid. Now, CLSA has come out with a report where they've upgraded the stock to an outperform rating with a revised target price of 12,700 rupees per share, where they believe that most of the negatives have already been priced in. Remember, last week when the wires and cables foray was announced, the stock had tanked a tad bit, and they believe that the worst is behind us. Concerns have all been priced in, and they believe that the risk reward at this juncture looks very attractive, with concerns of diversification to wires and cables business as well as the profitability most likely priced in. So very positive report that has come in from CLSA with respect to the risk reward, and also on the back of management clarification that has come in, the stock is gaining in trade today in an otherwise weak market.
All right, thank you so much, Ashesha, for getting us all those details. But Chakri, help us with your take on not just Ultratech but the whole cement pack, because there are a couple of reports highlighting that in the month gone by, there were no significant price hikes being taken. But in the month of March itself, there are hopes that the whole industry can actually see decent price hikes. But the key to note will be that, yes, this will be a financial year end, so some impact because of that. And whether they sustain it or not, that is something that we will be watching out for as well. But what's your sense on the cement pack, Chakri, and any particular play that looks attractive to you?
You know, Ultratech and Ambuja and ACC are the clear market leaders in a game which has become, which is volume led by Ultratech and ACC. Against that environment, the volumes are likely to go up, given that economically India is still in a weak spot and will improve going out. Second, pricing has not increased for the whole sector, and now we're beginning to see some amount of price increases, and that again will be led by Ultratech and Ambuja. So because given that the price increases have been below inflation rise over the last couple of years, I think there is enough room for them to increase prices. Now, third, in terms of their foray into wires and cables, now if you look at Ultratech, under the same roof of the distributor, they would sell cement, they would sell paint, and they would sell wires and cables, all belonging to the same construction segment. So the influences are the same. The guys who buy cement are the guys who buy wires and cable, and Ultratech, having a very strong brand name and presence and distributor reach, I think would be able to take market share very quickly, and therefore it will be accretive to Ultratech earnings over time, and therefore it's a good thing.
Right, okay, that's the take coming in on Ultratech. But what about, those beaten down names from within the wires and cable segment? What's happening with Polycab? What's KEI up to? Are they seeing any recovery or not? That's also going to be something meaningful to really look out for. And I think there was a Jeffries note on Polycab as well, wherein they actually say that they're maintaining their buy with the target price of 64.85 from the earlier 77.
7,700, and they're saying that they foresee no impact because of Ultratech's cable and wire foray to at least 2027. And some of these names have actually seen a recovery come by. But Chakri, what about the wire and cable segment? I mean, do you buy into the polycabs, RR cable, KEIs, etc. after the one-day correction that happened?
If we went back into a couple, 2 or 3 years, this is what happened to the paint industry with Asian Paints and all the other paint companies. One, you had the new paint companies come in and announce big plans. And I think, it's the same thing repeating all over again. And, at the end of the day, these are all largely commodity businesses. Yes, there is a certain amount of branding. But in the case of, Ultratech, it has strong backward and forward integration. It goes and buys some of its copper from Hindalco, and then it goes and he sells the product from the same distributor channel. So I think the margins for this industry with new competition coming in is likely to come down a little bit. Therefore, yes, indeed, the existing players are likely to see lower margins and therefore lower valuation multiples going forward.
If you like this video, then like, share and subscribe to ET Now.